हाय ये स्लाइड्स दिख रहे हैं. Yes.
Yeah, Manish.
लेट्स स्टार्ट देन. ठीक है. सो गुड आफ्टरनून एवरीवन, है ना. uh, so why I am doing this is I will tell you, because having conversation with lot of freshers and newcomers, I have realized कि uh, थोड़ा सा gap है in understanding of what actually tax is and how they can actually plan better. तो आई जस्ट थॉट कि जो भी मेरा अब तक का एक्सपीरियंस रहा है, वट एवर आई हैव लर्न सो फार, तो आई नॉट शेयर एंड शेयर विद द वाइडर फोरम. So that's why I'm just doing this. I'm not a expert, but I hope this will be useful to all of you guys. है ना? So let me start with this quote. So it was some guy, Benjamin Franklin. So he gave this quote, right? So in this world, nothing is certain but death and taxes. So till the time while you are having some sort of income, taxes, you have to pay tax. Hmm. Now coming to what is tax planning, it is simply means that you are minimizing your tax liability through whatever options that are available. Okay, so in India there are lot many sections are there, and if you exercise those options, you will be able to save your outgo money, you know. And why we should do this is, see, anything that is paid as a tax, that is a permanent loss. ठीक है. So उसको बचाने के लिए tax planning is necessary. So before I actually jump into what those options are, let me tell like what are the hits, things that actually counted as income in India. ठीक है. So in India there are essentially 5 heads. First is income from salary. So like most of us are a salaried person here, and that's the primary source of income for most of us. Apart from that, income from house property. So this is like rental income, or let's say if you have let out your property for some shop and something like that. So anything rental income that you're earning from that comes under house property. Next comes is income from business and profession. So profession is like something like lawyers, doctors, etc. Right? So a CA and all. So whatever service they render for their to the customers. So any income from that is considered as from their profession. And businessmen are like normal shopkeepers and all. So or any kind of business incomes come. Next is income from capital gains and income from other sources. So capital gains, I'll say is uh, so let's say you own some property, let's say a land, or let's say you own some flat, and let's say once you sold to some other person, and the price at which you bought that property or land, and when you sold that piece of land and or property, and the difference is in positive, so that is considered as capital gains. So this is treated as a separate income head, and the tax percentage that one has to, or basically the kind of tax treatment that needs to be done is totally different from the income that is you are gaining from salary. So it is considered as uh, a separate head. And then there are like income from other sources. So here again, income from other sources. Uh, so whatever form of income exclude which doesn't fall under the above four brackets are considered comes under that. As an example would be, let's say if you if you hold any stocks and you get some points short of dividend like that, so that will come under here. Or let's say you won some lottery, or let's say you won some prize money and all. So again, those kind of incomes will come here, income from other sources. So these are primarily the sources of income that is classified in Indian tax. This one. Hmm. Also, if you guys have any questions, feel free to interject me. है ना? Now coming to the tax slab. So here, whatever I have given, I have it is for the old regime. Old regime means I think previous to previous budget, we have now tax slabs, which is considered as new regime and old regime. What is there in the new regime is that the taxation rates are flat, but and it is actually lesser than the older regime. The uh, only thing that is taken away from difference between old and new regime is that in old regime you can uh, choose your options to save the taxes, where in the new regime there is no option where like you can let's say save certain amount of money in certain kind of investments and you save the taxes. So that is the primary difference between old and new regime. So because in new regime you don't have to like it is very simplified because things are very flat and there are no options where you can put your money and basically save. So calculations becomes easy. So I'm deliberately I'm not putting those tax slabs, and especially this session is meant for old regime only. Uh, One should actually go still prefer old regime because if you like when we go move forward and when you will get understanding of what are the options available to you, uh, most likely old regime comes out better than the new regime, you know. So so these are the rates, you know. So I think more or less people are aware of it. Now let me directly move to the crux of this session. Now what all options are available to us uh, so that our tax outgo is minimized, okay. So most of the things comes under this section 80C, which is written as like deductions under chapter 6E. Now the maximum limit of investments that you can actually do under this section is 1,50,000 rupees. Okay. And if you do this much amount of investment, you know, what how much amount of tax you will save is, so let's say if I am falling under 30% of the tax bracket, so including cess and all, it comes around 33%. So out of 1,50,000, I'll be saving one third of it, basically around 50,000 of my tax outgo will be saved. है ना? When I say, as I said, why tax planning is important, because once you whatever tax you have paid, that is a permanent loss. Okay. While if I do these kind of investment, which is like something like EPF or PPF and all, so these are my savings. Okay. So this is not a permanent loss. So right now I am just what I am doing is I am making my wallet little bit मतलब थोड़ा सा हल्का कर रहे हैं, है ना, बट आई एम सेविंग फॉर माई ओन पर्पज, जिससे माई टैक्स आउटगो इज लेस, बेसिकली परमानेंट लॉस इज लेस, ऑन अ फ्यूचर डेट ऑब्वियसली इन्वेस्टमेंट का रिटर्न आएगा तो मेरे पास वो पैसा वापस आ जाएगा, ठीक है. सो दैट्स व्हाई इट्स इंपॉर्टेंट टू क्लियरली एक्सरसाइज दिस कंप्लीट options available under this section. So you guys must have received an email from Shraddha where she has asked ki, please make all the declarations for IT exemptions till 15th of April. Okay? So please go ahead and do this. Okay? Under section 80C के अंदर में 1,50,000 का है ना. For the time being, even if let's say after the session you guys don't understand ki what which option you should go for, है ना, which option you should exercise for, है ना, but still go ahead and put 1,50,000 blindly against any of these options. Okay, so that at least from April onwards till December or January when she actually asks for the proof, your tax outgo अभी से नहीं होगा, है ना. At the time of January or February when actual proof of investments comes, okay, that time whatever you have declared here, it is not mandatory that the proof of declaration should match with those what you have declared now. And at that time you can uh, provide the proof for whatever investments you have made. Okay, for example, what I'm saying is, let's say while making the declaration, I went ahead and I said like in life insurance premium, I will make 1,50,000 ka complete investment. But when finance team is asking me for the proof in January or February month, that time I say, okay, I have not put any amount in, let's say, life insurance premium, but instead I have, let's say, put in EPF or PPF, है ना, and let's say some other options ऐसा करके, and you provide the proof, that is totally fine. ठीक है. So even after this session, if you guys don't have complete understanding or still confused which option is the best suited for you guys, है ना, please make the declaration, है ना, under any section and blindly put 1,50,000. This will save your money right now. Okay. Someone has a question.
Manish, it's me.
हाँ हाँ, tell me.
I wanted to add one, addition to it.
Hmm.
A lot of people I have seen,
Hmm.
while considering Section 80C,
Hmm.
guys, it's always better to consider, not the entire money of, 1.5 lakh. While I'll just tell you, because your PF contribution, which is employee, not employer. So 1800, if it is there in your payslip, into 12, which is 21,600. Leaving this amount, remaining ones, if you do investment, then only you get tax benefited of 1.5 lakh. If you do, 1.5 lakh plus 21,600, which is not a right investment, because that 21,600 benefit you don't get it.
No, no, understood. So I will cover that part. I was just
Yeah,
saying.
I just thought of adding it.
Yeah, yeah, sure, sure.
So it would be 1,28,400 rupees.
Something like that. Yes, is correct. Yeah, that's correct. Okay. Now coming to what are the options available under this section? Okay. So first is life insurance premium. So any kind of life insurance policies, and generally traditionally what has happened in our relatives, some or the other person is somehow involved in LIC, and they ask us to create open a new policy and all. So it might be your parents might have taken in your name, and they might be paying the insurance premium on your behalf, or you might have also opened on your own, है ना? So whatever money that is, है ना, that can be added here. So this is the first option. So uh, so uh, so all who are new coming into the job, so kindly check with your parents if they have taken any LIC kind of policy in your name and they are paying certain premium amount of it, है ना? If they are doing it, then whatever is the premium amount that you can add for under this section. Next is employee provident fund. So as Ankita explained, because company is cutting from on your behalf and paying into the EPF provident fund. So for us it is 1800. So multiplied by 12 months, whatever that amounts come. So that is automatically taken care of. Okay. So when I said like when you have to provide proof in the month of Jan and February, na, that time you actually don't have to provide proof for complete 1,50,000 because 1800 into 12 months is automatically taken care of. So you need to actually make investment 150 minus 1800 into 12. Na? So that is what Ankita was explaining. Now next is PPF. PPF is Public Provident Fund. Na? How EPF and PPF are different is EPF is from the employer side, and PPF is like uh, hello.
So, is this valid for both systems, the new system, tax system, and the older tax system?
No. So in new tax system, as I said, there are no deductions available. So what they have done is they have reduced the tax ka percentage, okay, in different slab rates.
Okay, sir. So, this is for the older system.
So the older system and older systems works out well, है ना?
Okay.
है ना? Newer system is basically very simple because you don't have to make a judicious decision where I should invest and what percentage I should do and all, है ना? So it's a little bit exercise one has to do, but older system always works out better.
Okay, sir.
ठीक है?
Cool, sir. Thank you, sir. Sir.
Now public provident fund is you have to open an it's a voluntary contribution from your end to the bank. This is how it works is the interest rate currently is I think 7.1%, and the interest income that you earn, that is also tax free. Whereas let's say if you open a fixed deposit, whatever interest you earn there, that is taxable. Okay, and also the fixed deposit rates are lower than PPF. So PPF is one of the very good option to save your taxes and make investments. Okay. Next is National Savings Certificate, Sukanya Samriddhi account. This is mainly meant for uh, couples who are having a girl child, and if you are making an investment against her name, so only those are considered as Sukanya. Next best option, if you ask me, is our ELSS, which are like equity linked savings scheme. So these are mutual funds Uh, so there are two categories of mutual funds: normal and ELSS. Normal is like where you don't get any tax benefit even if you make any investment on that. ELSS are if you make an investment there, है ना, those whatever amount you are investing that can be added here to reach your 1,50,000. Okay. Second difference is in mutual fund, if you which are not ELSS in nature, the lock-in period there is like one year. So before 1 year, if you sell, there's short-term gains tax comes. After 1 year, it is considered as capital gains tax. So in ELSS, that tenure is now 3 years. Uh, what actually it means is, yeah, come.
हाँ, I was gonna say the same thing. आप ये थोड़ा डिटेल में शॉर्ट टर्म और लॉन्ग टर्म वाला चीज समझा
हाँ,
सकते
yes, I will explain that. ठीक है. तो शॉर्ट टर्म का मीनिंग क्या होता है कि सो लेस देन 1 year है और एलएसएस में लेस देन 3 years को शॉर्ट टर्म मानते हैं. सो एनीथिंग दैट कम्स देयर, जो टैक्स रेट है उसमें डिफरेंट होता है. द टैक्स रेट इज मोर और लेस सेम एज जो आपका करंट टैक्स लेवल व्हेन इट इज इन द शॉर्ट टर्म पीरियड. जब वो व्हेन इट बिकम्स लॉन्ग टर्म, लाइक फॉर नॉर्मल म्यूचुअल फंड, आफ्टर 1 year it becomes long term. So let's say today I bought certain mutual fund ka units at certain price, let's say x rupees, 100 rupees. After 1 year, let's say I'm selling it at 110 rupees. ठीक है. So my gain is 10 rupees. ठीक है. Long term capital gains tax लगता है, तो that is 10% in India. Even if let's say I am falling into 30% tax bracket, but because I have crossed the threshold of 1 year, so the profit of 10 rupees will not, उसमें से 30% tax deduct नहीं होगा. It is falling under long term capital gains, so only 10% will be deducted. Okay, so this is the simple meaning of falling into long term capital gains. So for normal mutual fund, this period is 1 year. For equity linked ELSS mutual funds, it is 3 years. Okay, so if you buy an ELSS for tax saving purpose, understand that you should sell it, try to sell it only after 3 years. है ना? If you sell it before, then your tax outgo will be high. After 3 years, obviously 10% है तो ठीक है. Those who are falling under 10% tax liability के bracket में, for them it doesn't make much difference. But and I do understand what ELSS are there. Apart from that, like there are certain fixed deposits which is available under post offices and banks, but the tenure for them is 5 year, and because 5 year का lock-in है तो मतलब that much wait period you have. So if you make open those kind of fixed deposits, है ना, they can be added here. The only caveat is, like in PPF, the interest that you earn, that was tax free, but in 5 year post office or bank deposits, the whatever interest you earn, they become taxable. Okay. And lastly is, let's say if you have any home loan, so any principal which is payment which is made towards the home loan, है ना, they can also be added for 1,50,000. The only caveat here is the home, that house should be under construction. Okay. Once it is constructed and we have moved in or self-occupied it, then this option is not available. So this is only available for under construction houses. Okay. From my personal experience and as a general advice, I would ask everyone to basically open PPF. Okay. And use ELSS, and a combination of PPF plus ELSS is the best combination that works out. Okay. Why PPF? So PPF is basically a debt instrument and ELSS is basically an equity instrument. So what is debt? Debt is a promise, whereas equity is ownership. So when I say it's a debt instrument, that means somebody is promising you that if you invest me some X amount of money and hold it for a certain number of years of X, I will give you a guaranteed percentage of return. So as I said, in PPF, currently it is 7.1%. That means if I invest rupees 100 in that, in PPF, after 1 year, my value will be 107.1 rupee, and this is guaranteed. While in equity, it's ownership, there is no guarantee. So equity is like, it's it is little bit higher risk, but then in generally equities over a longer period of time, the returns are higher. So in 1 year, the market can go down. So even if let's say I've invested 100 rupees, my returns can be negative also. So my value of whatever ELSS funds I am holding, let's say I invested 100 rupees, next year it might even reach 95 rupees also. You know? But in generally, for a longer period of time, let's say consider 7+ years, equities always beat debt instruments के returns को, है ना? And it is very true for India also, because we are in any case are a developing economy, है ना? But there is a general golden rule that don't put all your eggs in the same basket. Similarly, don't put all investments into only ELSS, है ना? That's why I'm saying PPF plus ELSS should be the best combination. कितना percentage करना है नहीं करना है, those is like individual preference पे होता है, like what is your risk taking capability, or like how much you feel secure types. So that's a separate aspect, like how one should do investment and all. But in generally, like I would say ki open the PPF account and ELSS, है ना? One more good thing about PPF is like after 7 years, so in PPF, the lock-in period is 15 years, meaning if I put 100 rupees, I'll get with all the interest earned and all only at the end of 16th year. Okay, so that is a caveat in PPF. While in ELSS, after 3 years, I can take out all my money if I need. है ना? The only flexibility PPF provides you is that after 7 years, I can withdraw partial amount of money, which is something like I think 25% or 30% of the whatever is the accumulated wealth. है ना? But do understand in PPF, the whole complete money withdrawal can only happen after 15th year. Yeah, but so it's very good if you guys can actually open a PPF account as early as possible, so that 7 year comes jaldi se aa jayega. Secondly, if you don't want to contribute anything in PPF, है ना, the minimum required value is 500 rupees only. So open कर लो and 500 rupees से चलाते रहो types. So any doubts here in all these options available here? Yeah, shall I move forward? Yeah.
Sir, I just want to understand tax saving mutual fund. So any mutual fund that we add into, will that become part of under 80? Does that come under 80C
No,
after
no.
1 year, or are there specific funds for this?
No. So there are specific funds, है ना, and they are especially so when you go to any mutual fund site, है ना, so there is a separate category for ELSS. Okay.
Okay.
The normal, as I explained, the difference between normal mutual fund and ELSS is that lock-in period, which is 1 year and 3 year ka, and ELSS you get the benefit of getting into 1,50,000.
Okay.
Okay. So shall I move forward?
Hanji.
Okay, cool. Okay, next is NPS. So this is National Pension Scheme. Okay, this comes under section 80CD, 80CCD. Okay. There are there are three subcategories. One is CCD1. So in the previous, if you see, there was EPF, right, and PPF. So as an employee, you can actually choose that I don't want to go for EPF. I actually want to go for NPS. This is a new pension scheme which is option available. So what happens in national pension scheme is they are essentially again mutual fund investment only. Okay, there's a, so whatever amount you are putting, they actually go into share market only, and some portion of it actually goes into debt part also, but majority of the portion goes into share market. Whereas an EPF is, as I explained, it's a debt instrument. Basically, the return is guaranteed. Currently, EPF interest rate is 8.5%. So that is guaranteed that you will get, and any interest that you earn over EPF is again interest free. While whatever you put here in NPS, because it is getting invested into share market, so again the assumption here is over a longer period of time, the market returns always beat the debt ke returns. Okay. So some employees or persons, because this flexibility is available, and they have, let's say, a higher risk appetite, so they want to actually go for NPS also, है ना? So if you choose that, so there are three subcategories. First one will be calculated in your 1.5 lakh limit में, ठीक है? Second is you can go for 80 CCD2 also. So what happens here is you ask your employee to cut from your salary some additional amount. So there is some limit. I'm forgetting the limit. I think it is 10% of basic and something like that. But you are asking your employer to basically deduct some additional amount of money from your salary and put it into NPS. So this is over and above 1.5 lakh. So your total income on which tax will be calculated becomes lesser. The employer gets a bigger benefit here because whatever the employer is deducting from a salary, they can actually show it as a tax saving for corporate tax ke saving mein it helps. And the last subcategory available is 80CCD1B. So let's say I'm not going for here D1. I went for the previous option like EPF, PPF, and ELSS types. Apart from that, I can put additional 50K into NPS and I can save uh, tax on this additional 50,000. So maximum that I can save is 1.5 plus 50, which is 2 lakhs. Either way. Now, from again my personal experience and understanding, I would advise going against NPS. Okay. While the returns might be high, because it is getting invested into the equity market, but it's just my personal view, one should not opt for NPS. The reason being, there is you lose the control over your money for a very long period of time. Okay. Now understand this part clearly. So PPF, your lock-in period is 15 years, okay? But you can do a partial withdrawal after 7th year. Okay. ELSS lock-in period is 3 years. Your employee provident fund, the lock-in period is essentially working age is considered as in generally in India is 58 years or 60 years. Okay. So by that time you can make contributions to EPF. But let's say I at the age of let's say 45 years, I decided that I will no longer continue to work in do basically job. Basically, I want to take early retirement. So I can after 6 months actually I am eligible to withdraw all the money, whatever is there, whatever the corpus amount that has become in my EPF. I can actually withdraw complete money after 6 months of not actively working in any work. So these are the flexibility that you get with all the options available here. However, in NPS, the lock-in period is till 60 years of age. Till 60 years of age, whatever money that you have put into NPS, you cannot withdraw it completely. There are certain provisions to withdraw it during some emergency conditions. For example, like if somebody in your some family, or like you might have, let's say, become uh, some serious illness has cropped in, or let's say some marriage purpose is there. So there are very emergency provisions against which only you can withdraw certain money, but in generally you cannot withdraw it till 60 years of age. That is one restriction, right? Second, even at the age of 60 years, you don't have flexibility to withdraw complete amount of money. 40% of the corpus has to mandatorily go into a annuity retirement plan kind of scheme, and you can actually withdraw maximum of 60%. So I'll explain it again. So let's say I actively invested in NPS, and let's say when I reached the age of 60 years, my corpus was 100 rupees. Okay. The rules doesn't allow me to withdraw all the 100 rupees of money for myself. I cannot withdraw all the 100 rupees of money. I have to mandatorily invest 40 rupees, or I think 60 rupees. Maybe I'm mixing up, but assume let's say it is 60 rupees. So I have to invest 60 rupees into some retirement planning mandatory. So what they will do is they will give you some monthly income per month, some certain amount of money you will be getting, and the rest 40% of the money, which is 40 rupees, I can withdraw it completely. Now, right now, India doesn't have any good retirement plans, and where you hardly get 3 to 4% of return kind of thing. So they doesn't work good. Second thing, let's say at the end of 60 years, I want to, let's say, buy a huge, let's say, property and all, and put out something on the rent, and also that my rental income is linked with, let's say, pension, because rent increases every year, right? But because there is a restriction that you cannot withdraw it on all the money, right, and you have to put it into certain different instrument whose return in anyways is not good, है ना? So you lose the flexibility of actually buying something which uh, secures your income in an inflationary way, right? Because inflation is something like it cannot be stopped. So that's why I say NPS is not a good option. I will personally advise not to go for it, because you lose the flexibility, because till 60 years of age you are locked in, and even if once you have that lock-in period goes away, the flexibility to basically take out all the money and basically decide how I should create secure my income through a bigger corpus that I have saved so far. So you lose that part. While in the previous case, maximum if you see is in PPF, which is 15 years. After that, like you can withdraw complete money. ELSS is 3 years, and EPF is like whenever you leave the job after 6 months, you are eligible for completely withdrawing all the money. So from these two perspective only, I will say like don't think about NPS. While NPS works very good for the companies, because any contribution the company makes on employees' behalf, they uh, they are able to reduce the corporate tax. So it works good for companies, but for an individual, in my personal view, it doesn't work good. So clear in this part? Okay, I'll move to next. Now next comes is section 80D, so which is medical insurance. Now, even though companies provide us health insurance, on our behalf, uh, it's always better to also buy medical insurance personally also. I'll like if somebody wants to know why, let's take it offline, because there are it's a longer discussion. But let's say if you buy medical insurance personally, which is for yourself, spouse, and children, then per year maximum of 25,000 insurance can be deducted, and from your income tax liability you can deduct this much amount. So this is on top of 1.5, and after that this is 25,000. And let's say you are paying medical insurance premium for your parents also, dependent parents also, right? So if the values are like this, so if your parents are less than 60 years of age, and any insurance that you have bought in their name, so 25,000, that's the max limit you can deduct. And if they are more than 60 years, then 50,000. Now this is the maximum amount, but whatever is the actual premium amount, that only can be deducted. So let's say if I bought medical insurance for myself and the value is, let's say, 20,000 rupees, so I'll get a benefit of 20,000. If it is 30,000, then the maximum benefit is 25,000 only. Okay. Apart from that, rupees 5,000 for health checkup, that can be directly deducted, and for this, like, they don't no proof is actually required. So these are for preemptive health checkups, annual health checkups that you do. And this 5,000 for yourself, and also for your parents. So 5 plus 5, 10,000, and then let's say you are paying for your parents and yourself, so 25 plus 25, 50,000 additional. Okay. So right now our company is providing, I think, 7 lakhs ka insurance hai. For that you don't have to pay anything. But on top of that, personal advice hai ki, like, do buy on your own, and whatever premium you will pay, that you can deduct from your income tax. Okay. Moving to next. Okay. Now, as I said, this session was mainly I was targeting the persons who have joined, like, freshers kind of. So many of the people these days do take education loan to complete their education, you know. So any interest that you are paying on the education loan, है ना, that you can put under this section, and this is over and above 1.5 plus previous medical insurance thing. Here, the amount is not the principal amount that you have taken; it's the interest on the education loan. Okay, I hope this point is clear. Huh? Okay, moving to next. The last available avenue here is donations. So donations for, let's say, any social cause. So any registered NGO, है ना, who have got the certificate, है ना, which can provide you this 80G का certificate, है ना. So any donations made to those NGOs, है ना, they are either eligible for 100% or 50%. So there are certain categories जहाँ पे, let's say, if I donate 100 rupees, I can deduct in my total income calculation पे 100 rupees, और in some cases mostly NGOs में वो 50 rupees का deduction होता है. ठीक है. So any donations like PM care funds में people did last year, है ना, army relief, emergency relief funds are another, है ना. Then let's say there are like Helpage India or Old Age India, है ना, people do these kind of donations. So those amounts also you can deduct from your total income calculations. Okay, so far these are the options available from investment point of view to save your taxes. So any questions so far? Okay, I'll move to the last part. Yeah, yeah, go ahead. Go ahead.
Can you suggest some ELSS or mutual funds, like personally?
Yeah, sure. We'll take it offline. Na?
Okay, okay.
Cool. So that we can do. Last part is this flexible benefits plan, and here I was very happy when last year Ankita told us that flexible benefits plan is available for us also. So it's actually again helps you guys to reduce your tax liability. Okay. It doesn't reduce your take home salary, है ना? But what it helps is any expenses incurred against these headings, right? You can actually deduct from your total income. Total income which becomes liable for tax. So if you see, these are the heads available for us, and these are the maximum limits. So for example, let's take books and periodicals. So meaning, let's say if anything you are purchasing any books, है ना, for your own professional growth, right? Now you can claim whatever amount of book that you have cleared to a maximum limit of 36,000 rupees, and that can will be deducted under from your tax calculations. Similarly, like telecommunication. So let's say if you have any broadband available, or if you have any postpaid connection, है ना? So again, you can claim this under this flexible benefits plan up to a limit of 36,000. है ना? So similarly, there are different heads. Meal card, we don't have to worry because it is automatically taken care of. We don't have to declare. So if you see, like accounts team has asked us, right, to declare IT declarations before 15, right? So even this flexible benefits plan is also available, currently open, है ना? Go ahead and enter certain values against all these things, है ना? For whichever you guys are applicable for. For example, like if you don't own a car, personal car in Bangalore, right? Then I think this fuel less than 1.6 cc or more than 1.6 cc, those things goes out of question for us. But those who are, let's say, having their own personal car, they can take benefit of these headings, you know, and driver's area. So these are various headings. So again, log into that gray that our HR portal, and also declare certain amounts against all these columns. Okay. What it will help is, it will not reduce your take home salary, but it will help you reduce further uh, taxes, because your the income on which the tax will be calculated, that will get lowered by the amount that you declare here. Fine. Yes, go ahead.
Sir, what will happen in case
Hmm.
an amount and
So yeah, so how this flexible benefits works here is, so let's say I went and declared, let's say inside books and periodical 36,000 amount of rupees. Okay. In my next month salary, है ना, if I have not purchased any book, है ना, so no, मतलब my tax liability will not become less. Okay. If I have purchased a book and I have actually uploaded a receipt, then only in that month my tax liability will reduce by that much amount. Got it?
Got it. Got it. So
हाँ,
in hand
like
salary will remain the same. Only tax deduction will not be affected.
yes. So yeah, so go ahead and declare. It doesn't matter. I know. Go ahead and declare. Let's say I'll exercise to the maximum limit all these options. Okay, whichever is applicable. Let's say I know for sure that I don't have a vehicle, so I will not in my name. I will not go for driver salary and fuel expenses, right? But rest all I can put some money, and only when I have exercised these options. Let's say I have actually bought a book, and I have a receipt. Similarly, I have a postpaid plan, so every month I am paying bill. I upload those receipts in the portal, and the accounts team then considers that much amount while calculating the salary for that month. है ना? So that benefit. So no harm putting in any value, because in any case it's not going to affect unless and until you provide any receipt. Okay, but it's a good option. It's a very good option because it really helps to reduce taxes apart from whatever options were available earlier.
Got it.
So yeah, so that's it. Any questions or anything you guys want to ask?
So what is LTA?
So LTA is a leave travel allowance. How it works is in a block of 4 years, you can claim this expenditure twice. So last time it was from I think uh, 18 to 21. So 18, 19, 20, 20. So now it is 22, 23, 24, and 25. So in this block, let's say if you went for any holiday, let's say, so any expenses that you incurred there, let's say I went to let's say Ladakh, for example, with my family, and during that time I was working in the company and I was on the paid leave, and I officially applied for leave, and my leave was sanctioned, and I went to Ladakh. I stayed in a hotel and I ate, I did eating and also, you know. So whatever is the expenditure I have done there, right, I can claim it under the head of LTA. So let's say my total expenses were, let's say, 2 lakh rupees during my uh, holiday, right, in Ladakh. So here maximum limit is 3 lakh. I upload all the receipts in the portal of 2 lakhs rupees and say that I was in leave during that period of time. Then the total income on which the tax will be calculated, will become lesser by 2 lakhs rupees. So that is what is leave travel allowance. Understand?
Yes, sir. Thank you, sir.
Cool. So this you can claim twice in a block of 4 years. ठीक है? It is not mandatory कि हर साल ही आपको करना, 4 साल में आप 2 बार कभी भी कर सकते हो. So only claim this, exercise this option when in a year when you have a major expenditure toward your holiday or vacation. Okay. Any other questions? Hello. Okay. Then thanks all. I hope this session will be useful to you guys. Okay.
Yes, sir. It was like quite helpful.
It was
Okay.
Thanks so much, sir.
Anna. So what are the next set of actions that you guys need to do? First thing is 15th April wala deadline hai. Go ahead and do. As I said, even if you are not sure ki which options you guys will actually exercise in this one, at least put the value of 1,50,000 डाल लो. What Ankita explained is correct कि आपको एक्चुअल में उतना 1,50,000 रुपीज पुट करने की जरूरत नहीं है. यू डोंट हैव टू पुट दैट मच अमाउंट, है ना. ठीक है. When during the time of January and February, that is the time you can show any other investment जहाँ पे आपने करा. So this is the first thing you guys should do, है ना. Go ahead and put this 1,50,000 का किसी भी हेडिंग के अंदर में डाल दो. अगर आपको क्लैरिटी है कि ऑन विच आर द ऑप्शंस आई वांट टू डू, वहां पे डाल दो फर्स्ट. सेकंड थिंग, फ्लेक्सिबल बेनिफिट का भी गो अहेड एंड पुट अमाउंट्स, है ना. एंड मेक इट अ हैबिट. आई थिंक 15 से पहले जो भी है, अगर इफ यू हैव एक्सरसाइज, यू हैव द प्रूफ, यू हैव एक्चुअली इनकर्ड इन एक्सपेंडिचर, पोर्टल में अपलोड कर दो, ऑटोमेटिकली आपके सैलरी में कैलकुलेट हो जाएगा. थर्ड थिंग, the biggest mistake I would not say, like due to ignorance people does is they make a 1.5 वाला investment during the month of Jan, Feb या December में, and that is the time when this most of the time this LIC guys जो relatives होते हैं, they make use of us, गली में, है ना, थोड़ा प्रेशर रहता है. Don't wait for Jan and Feb कि जब मेरे से proof मांगा जा रहा है, that is the time I should actually make investment, ठीक है. Nobody stops you per month contribution में, ठीक है. If let's say I have chosen PPF and let's say I have chosen ELSS, ठीक है, minimum amount that can be invested there is in PPF it is 500, in ELSS it is 1,000 rupees, ठीक है. आप हर महीने 5,000 है ना, 5,000 10,000 है ना, whatever is working from according to your salary, liquidity and all, but कंट्रीब्यूटेड मंथली हैबिट बना लो, है ना. डू इट इन अ डिसिप्लिन वे, सो दैट जब वो जैन फैब में वो प्रूफ मांगा जाएगा ना, यू विल नॉट बी इन अ सुक यार मैं, है ना, 1,20,000 रुपीज इकट्ठे किस में डालू, कहाँ डालू टाइप, है ना. पर मंथ स्मॉल स्मॉल में कटना, इफ इट इज गेटिंग कट राइट, इट स्टिल मतलब यू विल नॉट इवन रियलाइज, यू विल नॉट फील द प्रेशर एट द एंड, ठीक है. तो डू दिस थ्री थिंग्स, है ना. पहले तो डिक्लेयर कर दो, सेकंड any choose any options here and monthly contribute towards it. So that would be, ठीक है. Thanks all.
Thank you, sir. Thank you.
Thank you, sir.
Thanks.
Thank you, sir.